is expert in Instant Pip, but we're going to cover still in a lot of details of Instant Pip. And later, when we have a bit of time, we go into actual understanding of live charts. Alright? You don't seem happy. Come on, it's your moment. Come on, yes. Give us a round of applause. Come on. As you know, Instant Pip is where it has come down and down and down. That is the sound of the evil. It's not me. I usually sound very nice, right? So when the market goes up and up and up, definitely there will be a time where it comes down, right? Instant Pip is the moment we are capturing it when it comes down. And when it comes down, you have a signal where you are dealing with the heart of the issue. That happens when you see one candlestick within a candlestick of before. Then another one will come down. That is a good understanding. The Instant Pip happens. And to back up the understanding, that's where we look at the indicators. Before you look at indicators, you must look at the heart of the issue. Just like you make friends. You don't look at the surface. I know some of you like to look at nice legs and other things I don't mention. Okay? But at the end of the day, it's heart that matters. Just like we are doing trading. You got to see the candlesticks. Because the candlesticks decides the indicators. When you see movements of price, that will lead the indicators to move into a certain direction. When the movement of price does not fall into making the indicators to move into a certain direction of the candlesticks, then don't enter. Don't go and ask the market, why? Why like that? You know, trading is something, we don't have to ask why. We just respond. It's less complicated in our life. Our life, we ask a lot of why. We even ask to somebody that we don't know. We're still asking. But in trading, you don't need to ask why. Just respond. The purpose of trading Instant Pip, and in the tutorial, 4 strategies: Instant Pip, retracement, explosive, and Pip maximizer. Out of the four strategies, the 3 strategies we are looking at, very short time frame. We always say, we look at a 15-minute for reference. Yes, give a round of applause. Come on. The more you say, the more you know, and the market will reward you. So when we look at a 15 minutes reference, we look at the 30-minute as support. Then we look at a 5-minute for backup, and the very 1 minute for confirmation. So this is very short-term trading. So our purpose is very simple. Even a lot of my friends ask me to correct this. Where got 3 hours? Okay? And many examples that we have shown you right in your eyes, that within 4 minutes, 5 minutes, 6 minutes, it goes 10 pips, 15 pips, or even sometimes 20 pips. Well, that's why one key thing that we have to learn before we enter the market to buy or to sell, we always learn. When we enter, zao! Give us a round of applause. Come on. This is very fast because in FX, the pips move up and down. The moment you know it, it moves 10 pips in your favor. You don't want to take the market says 8 pips, want or not? You don't want 5 pips, you want or not? Imagine you are trading with 10 contracts or 20 contracts from 10 pips in your favor, which is 100 pip profit. 100 times 1.5, you are trading US dollar or Euro yen, okay? Then will be 150. We drop to 5 pip, your profit half. Drop 2 pip, you left with $20. Drop 1 pip, still don't want. Then minus 10 pip, you go and take. That's why, before we enter, always learn. The moment we enter, get ready to zao. Come on, give us a round of applause. So in the trade that we're entering for Instant Pip, the candlestick must near the Bollinger Band. When that happens as the heart of the issue, then we look at the indicators. The indicators, we look at stochastic, RSI, CCI, and parabolic SAR. Now, a lot of my friends also ask me, why you look at, why in my chart, if you look at my chart, I don't look at CCI now, I don't look at RSI, because it eats into my space. If you observe, the RSI and CCI takes the profile of the stochastic. So trading is a journey that you're embarking. When we attend the course, we look at CCI, RSI, and stochastic. But once you keep observing, and you keep observing, you will discover new things. But always the mistake that we make is that in the beginning of our journey, we tend to slam too many things for us to observe until we are confused. Agree or not? Like now you're confused, huh? So before you reduce, at least you stick to these three things you're looking at: stochastic, CCI, RSI, and parabolic SAR. Parabolic SAR will be the last thing you look at. Why? Because parabolic SAR is a lagging indicator. When you are trading instant pip, we say that, let's say it goes, I cannot say down, just now say down, you know the effect. So let's say go up, 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 up. The moment it comes down, where's your parabolic SAR? Still below. So are you going to wait until the parabolic SAR switches place, then you go and sell? You might be too late. Okay, you might be too late. So most of the times when you're doing short-term trading, your 15-minute, usually the parabolic SAR will not be in your favor. Your 30-minute, you wait long, you lose also no point. Okay? Your 5-minute might. Your 1-minute must. So if you are looking at parabolic SAR, pay attention to only your 1 minute. The rest of the time frame, unless the candlestick is only 2 to 3 pips away from the parabolic SAR, then loan for it to switch. Other than that, don't wait, because we are trading on 4 time frame. We're not looking at 15-minute instant pip, then we trade. You know, last time I got trapped like that. Wow, 15-minute instant pip, chong 30-minute also got instant pip, chong again. So chong, die faster. So in trading, don't go and chong. You take money already, you want chong, go St. James to chong. Okay? Well, if the sand all imported, next year you're going to open, take the money, go there and chong with the sand also. Okay? So we always check time frame. What we mean by checking time frame is that, you see, as 1 minute start to build the momentum to go up, your 5-minute will eventually go up. Your 5-minute eventually go up, your 15-minute will go up and up, then lead your 30-minute will go up. So most of the times, if you take 15-minute as a reference point, where it just shows as an instant pip, your 30-minute will show that it's an instant pip setup, which means the candle just within the previous candle. While your 5-minute may show that the trend is going up a while already. From the previous candle, it might be instant pip. While your 1 minute, at that moment, it could have moved a bit of sideways, previously moved up, then sideways, now about to explode again. So this is the scene that when you see, you're observing, and the 1 minute start exploding, it will lead the rest of the time frame into an uptrend. And your 15-minute is a confirmation of instant pip. That's why the 15-minute is a reference. Your 30-minute as a support, because the instant pip, the last candle is within the previous candle. The 5-minute as a backup, because the 5-minute has really shown as an uptrend. That's why you need your 1 minute to do your confirmation. Sometimes you're not careful. Your 15-minute show instant pip, 30-minute set up already. Then you say, very, very safe. Very, very safe. Don't worry, you're captured already. Because you hang there, you walk slowly. Okay? Then, very, very slowly, you don't enter. Okay? And then you wait. That is the right moment. Because if you don't wait for 1 minute to explode, you won't know. Even when 15-minute instant pip, 30-minute instant pip set up, it will still go up. Because 15-minute was still hovering. Then your 1 minute doesn't go up, it goes sideways. When 1 minute goes sideways, your profit and loss sometimes plus $1, minus $5, plus $2, minus 50 cents, also blur. Then our heart moves sideways together with the chart. That's the most painful. Because heart move sideways is moving out of your body. Okay, move up, down better. Still within body. Move sideways, must look for surgery already. So that's why we always look at 4 time frame. 1 hour, you can look at it as a reference, but not necessary. 4 hours is too far-fetched. 1 day is too far-fetched. Because in a day, even is going up as a tsunami. It happens when the day 1 may be still, because the range is what? 100 to 200 pips within a day. So the 100 to 200 pips may be moving down, going up, moving down, going up. This up and down in your 1 day will be very clear and transparent in your 4 time frame. Especially you are taking 15 minutes as a reference. More June. Because 15 minutes, you not only take as a reference, you have a lot of other time frame. One to support, one to back up, one to confirm. That's the whole idea. When you do short-term trading, don't just look at 1 time frame. Okay? Please, any question, please ask. It's not about the video photography, okay? It's about you. Every moment is about you. It's not about me also. Any question, please ask. So when there's conditions to buy, to enter, the candlestick near the Bollinger Band. I know it's a full sentence. I won't read for you. Don't try to read. Later we go into details on looking at the charts. Because if we give you too many words, you will fantasize. Give you pictures, you will imagine. So either way also jialat. That's why the only way we can resolve your problem is you ask. And even I give you my telephone number, I give you my email, also no use. You know why? Because even you have question now, you don't ask. When you call me or you email a long email, you won't get the complete understanding. You also confuse me. That's why now is the right moment for you. Still very quiet. Come on, give yourself a round of applause. Okay, when you see the candlestick near the Bollinger Band, and the second candle is within the first candle, that's a setup. When the final third candle moves up, okay, that's a good confirmation. Then you look at stochastic, it should be going up above 20, RSI above 30, CCI going up above minus 100. Your parabolics are, in this case, a 50-minute is very unlikely that you will be in your favor. Then you check time frame, okay? When we say candlestick setup, most of the times we are referring that the candlestick, the second candle, which is the white candle in this case, is within the first candle. Well, not a lot of cases, not all the time the cases will be like this. So a lot of my friends ask me, if it goes above, wow, chong, because it's advanced, instant pip. No, The reasons why the candle is within the candle. Remember when it goes all the way down, 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 down. The candle that is within the first candle is a significant. The significance says that the drop, the fall, has been contained. If you realize that the next candle is within the first candle, the drop has been contained. That's why the second candle is preferably good to be in this range. Well, if you have amassed enough wealth to finance your other risk, like if the candle is above or the candle is below, as the expert, above is the advanced, you want to finance this kind of different understanding and risk, then make sure that you have found enough within to make your money. Then the rest you can finance your risk. A lot of our mistakes is that we take a lot of risk without financing our wealth first. Then we take too much risk, you know what we'll do? When our interesting entertainment center, the government say is a resort, integrated resort, not just resort, then we'll go to the highest level. And then we will look down for more excitement. So please, don't trade like that. In the beginning of your trading journey, stick to all your rules and understanding. After you go through the understanding and momentum and you make some money along the way, then you could take some risk. Don't take risks like that. And this is a month of offering. Don't think that you take risks, you offer to the market will reward you. Doesn't work this way, okay? Because the market doesn't know we have family problems. Doesn't know our problems. And the more you ayah to the market hates you more. Okay? Give you money, don't want to take. Make money, you complain. That's the whole problem, you see. You see, sometimes when you see 3 pip, 4 pip, yeah, don't worry. In our favor already, don't take. After it quickly reverse. Although all the indicators shows that it's still in your favor, but it really reverse. You see, that's why when you enter a trade, we have to learn to quickly tell. If you rely on indicators, although their strategy to exit, but at the end of the day, the indicators may be still in your favor, but you are making a loss. And before that, you are making money. It happens a lot of times. So what is real? Money is real. You are real, not indicators. Okay? So when we look at buy to enter, you see in this case, the market has been dropping explosive, comes down all the way in your M15, all the way. But what is interesting is here, you see, it has a huge drop. The second candle is within the first candle. The third candle start to move up. Our issue is when it start to move up, then we trade. Because we say that as the third candle move out, then the indicators, where the stochastic goes up, the CCI goes up, the RSI goes up, and the parabolic star switches place, then we trade, right? You see, in this case, if you're going to wait the parabolic star to switch place, most likely the parabolic star is around this area. You see, right? Because this is the previous, this should be around this area, right? The candles opens here, move down a bit, go all the way up. All the way up here is about 40 pips. Okay? You observe that? Do you want to capture the 40 pips? Give them a round of applause. Come on, only they are excited. Where's the rest? Where's the rest? Don't scare me, This month is am I talking to people? Make some noise, please help me along the way. You see, in this case, you want to capitalize that also. And this candle, you move all the way up, then the parabolic star switches place. After that, immediately when the parabolic star switches place, the strange thing is what happened. It went all the way down. So we cannot control the market. We cannot say, wow, the market already chong. Go in. Imagine if you bought one here. It really went all the way down and closed here. You know you're sitting with at least about 30 pip loss. And if you see a pattern like that, maybe you're not trading about 5 contracts. Maybe you're doing with 10 contracts, 30 pip, 10 contracts. Will you be waiting for it to go up? By the time your heart already, you lost track already. That's the whole problem. That's why there's a whole problem if you just enter based on one time frame. We have to constantly look at other time frames.